Hello and welcome to LAT's Weekly Market Insights. Markets have been dominated this week by the action-packed economic calendar. Rate decisions from the Fed and the BOE prompted moves in both the indices and FX markets. The Fed were first out of the blocks with a less dovish tone than expected, indicating there was no plan to buy any further bonds. This prompted some short-term dollar strength and a move away from the 119 handle in euro dollar, before ultimately the reality and power of ultra-low rates turned the dollar bearish once again, allowing euro dollar to bounce from the lows. As we look to the chart, once again we can see that previous higher low circled here in red, acting as key support. That channel previously discussed in Market Insights, whilst broken, is yet to unlock any major downside pressure. The head and shoulders formation still intact, but same status remains. We must see a break and a close below that 117.53 level if we are to open up these moves down to the S2 and S3 pivot points at the 116 and 115 handles. All eyes to euro dollar at the moment as we test that monthly pivot point and see if we can make a move back down towards that entry level. Interestingly, amid the uncertainty in pre-FOMC, short-term trades did present themselves off the back of the weaker than expected retail sales figures out of the US. And to have a look at that, we're going to come across to the S&P 500 and we're going to start on the hourly chart and make our way down into the 5-minute for a short-term execution. We can see this nice tight range that started to unfold here on the hourly chart. And importantly, as we approach this key resistance up through here at 34.24, this was around 2 hours prior to that retail sales figure. With key resistance there reinforced once again by our pivot points, potentially this was an opportunity for us to try and short S&P 500. As we look towards the daily pivots, we can see that sat perfectly in line with the resistance level. Also in line with that is the weekly R1 pivot point, and if that wasn't enough, we also had this monthly pivot point, all combining with a lovely level of confluence between the primary resistance and those 3 time frame pivot points. If we turn those pivots off now and make our way down into the smaller time frames, we can see this lovely multiple touch confirmed bullish trend line that developed over the past week. 15-minute levels here all in purple, and we can see clear support through here at that 3400 round number. Previous resistance broke, and most importantly now acting as potential support. Now, if we are to see a rejection of this hourly level as we did, we would always like to see a reversal pattern of some sort and also a loss in that trend momentum. If we make our way into that 5-minute chart, this now our execution time frame, we can see this head and shoulders formation but formed perfectly at resistance. The neckline also here a nicely well respected resistance level, breaking and therefore becoming support. If we wanted additional confirmation that perhaps there was going to be a rejection from this level, it could have come from our relative strength index, our 14-period RSI here, showing bearish divergence from this left shoulder up towards the head. Now, whilst this is a technical trade and a technical setup, fundamentals here also in play. Retail sales coming in weaker than expected, and this is the selling pressure that we see immediately hit the market at 1:30 when that data is released. We see the break and a trigger short in this market before a small corrective move and then continuing lower, perfectly down to that 15-minute trend line where we expected potential support to come into the market. If we come back out to the hourly chart here now, we can see the larger picture and how this unfolded with a break of that 15-minute trend line and a continuation to the downside and making our way down to test the lows of this range. A lovely example here of technical analysis combined with primary, secondary, and the catalyst of the fundamental macroeconomic data. As we look towards home soil and the Bank of England, we received a far more dovish tone than we did from the Fed. The committee had discussed its policy toolkit and the effectiveness of negative policy rates in particular. In light of the decline in global interest rates over a number of years, subsequently, the MPC had been briefed on the Bank of England's plans to explore how a negative bank rate could be implemented effectively. This planned out very nicely in sterling yen, with that dovish tone sending weakness through sterling. We can see this range that had developed back from the 10th of September, breaking aggressively lower and meeting the MPO here. This MPO just taking as the range of this move. Again, bringing pivot points back into light, we can introduce the monthly pivots and we see a lovely rejection from that S3 level to the absolute pip here before sterling yen retraced, gave back, regained all of its losses and is now back trading and respecting that range previously established. As we look to next week, the economic calendar shows a slowdown in pace with a rate decision from the RBNZ and Switzerland. With little in the calendar, we can look towards the technicals for guidance as to where our next trade will come from. That's all from us this week at LAT. Please do join us again, same time next week for another Weekly Market Insights.